2025 was the start of a new age. I don't know how long it's gonna last, maybe till 2029, maybe till 2070. I don't know what it will exactly look like. It seems like it involves great power competition where it's normal for larger powers to swallow smaller ones, and increased combination between government and business with the rise of things like industrial policy, sovereign wealth funds, planned trade, and people with clear business interests running governments. If you want to be pretentious, call it Neo-Westphalian financial imperialism or something dumb. That'll be a real hit. America is playing the central role in moving us into this new world with something that's playfully being called the Mara Lago Accord, an explicit plan to weaken the value of the US dollar and marry together economic and security policy. What it is a plan to more clearly classify America's defense arrangements, only providing security to paying members of their economic zone, what is essentially a tributary system. Trump's economics teams hopes this will 1. Bring back American manufacturing, and 2. Drastically reduce America's debt. The centerpiece of the argument is that the US dollar is overvalued because of the dollar's reserve currency status, causing Americans to be relatively richer on the global stage, importing more and exporting less. This has caused export-based industries like steel and auto manufacturing in the Great Lakes region to basically shut down. Now, the truth is much more complicated than that. American steel companies failed to innovate and lost to Japanese and German competition. Productivity gains moved to the software revolution centered around the West Coast. China undercut Americans with hundreds of millions of cheaply paid factory workers, but there is merit to the dollar argument. A higher exchange rate is associated with a higher trade deficit. What's more, to Stephen Moran, chair of Trump's Council of Economic Advisors, unlike what traditional economic theory says, where an exchange rate will eventually equalize over time to adjust to trade or financial conditions, he argues there is no such equilibrium point. These graphs don't exist. The dollar will just continue to strengthen as it has been since the 80s, causing the trade deficit to fall without an end in sight. So what does all this have to do with the proposed tributary system? Well, the single asset which has upheld our financial system ever since Nixon took us off the gold standard has been the Treasury security, a loan to the US government. Because of their safety, stability, liquidity, and rule of law, America has been the place to park excess reserves, and T-securities have been the way to do it. But critics argue this pushes up the demand for the dollar, increasing its value, which can make it harder to export and pay off debt. When you add in the fact that America has essentially paid for its allies' defense budgets since World War II with the Bretton Woods Agreement, it does get costly to maintain this spending. China is America's latest rival. They are also far more capable than the Soviet Union or Middle East ever was. The Trump administration has made a decision that providing defense while trying to fight China for global dominance has, in their eyes, harmed the average American too much through the taxes needed to fund it and that overvalued dollar. So their new security arrangement would go something like this. 1. American security is not something you can take for granted, and just like you have to indirectly pay for roads through taxes, foreign governments must pay for the security by lending the US government money. 2. Instead of the usual Treasury securities, which last anywhere from 1 month to 30 years, paid back with interest, we want to be paid in 50 or 100-year bonds which pay zero interest to drastically reduce our year-to-year debt burden. And 3, if you don't pay us these golden century bonds, we will exclude you from our economic security alliance using tariffs. This would allow the Trump administration to negotiate currency agreements to artificially weaken the dollar's value while still maintaining its reserve status, something he's threatened tariffs over. Now I would argue that treasuries' values comes from their stability, convertibility, and market size, and this doesn't have anything to do with the dollar's reserve currency status, something I've made a whole video on. I would also argue that the reason the US has a trade deficit is because Americans happen to be some of the richest people on Earth, and they like buying things, like Nintendo Switch 2s, not due to some monetary distortion from the current political order. And this gets into the biggest flaw with this plan. Without stability or attractiveness, who's gonna buy these century bonds? A 100-year bond that pays no interest is by all means an absolutely horrible investment. Yes, it is US allies which primarily hold Treasury securities in the first place. Japan is first at $1.1 trillion in US debt, then it's China, the UK, Luxembourg, and the Cayman Islands. The last two are interesting because these would generally be offshore accounts only located in these territories which do the investing. The United States isn't going to be able to pressure the Cayman Islands into transforming its debt into century bonds because it's not the Cayman Islanders doing the investing. Okay, they definitely could pressure the Caymans, but the money would flow right out from those islands into a new offshore banking haven. In order to get rid of these banking havens undercutting the century bond idea, these rules would have to be imposed on every country at once, allies and enemies. Foreign investors make up less than a quarter of American debt, compared to over half held by Americans themselves. A radical debt restructuring plan just cannot rely on foreign security deals alone. The better thing America could do is to negotiate currency arrangements with individual countries or blocs. This is more level-headed and has actually worked in the past, most particularly in 1985 when America negotiated the Plaza Accord with their closest allies to devalue the dollar by as much as half its previous value. The basic gist would be to get foreign reserve managers to sell their dollar assets or get the Federal Reserve to buy the foreign currency, artificially weakening the dollar's value in comparison to the other currency. They could do a one-time devaluation like the Plaza Accord, or even a peg like in the Bretton Woods system. The problem is, a weaker dollar implies that the other currency will be stronger. Europe, Japan, China, and Russia's economies have not been doing amazing since COVID, and all would probably like a weaker currency to boost their manufacturing capabilities as well. The carrot approach here would be security guarantees to get a currency deal. Although guarantees rely on trust, and with America's abandonment of Ukraine in its war against Russia, as well as its threats to annex Canada, Greenland, and Panama, maybe a guarantee wouldn't work. Clearly defining who is part of America's safety net and who isn't could also encourage aggressive behavior from America's rivals. If Taiwan doesn't agree to sell its dollar assets, should it be allowed to be taken over by China? The other method, the stick, would be to use tariffs as a negotiating tool to set up some long-term currency agreement. The threat of being cut off from the world's largest consumer market is a powerful one, but there is one major problem with this tariff approach. They make the dollar stronger. Because of the fewer imports post-tariff and the investment into the American market, tariffs generally strengthen the value of the dollar. This is what happened during America's 2018-19 trade war with China. Even though the tariff rate effectively went up by 17%, the dollar had grown around 14% more valuable compared to the yuan, making imports cheaper and almost fully canceling out the price increase of the extra import tax. That's why economists like Noah Smith have called for targeted tariffs in critical sectors the United States is behind on. Things like battery production, robot manufacturing, drone building, and solar panel production. If China is ahead in water bottle and dog food manufacturing, but also sectors which will give them future power like batteries and electric vehicles, and a blanket tariff was put on China, yes, the US will buy less of all of these things. But after time, the dollar will grow stronger and, in fact, increase their imports again of everything, including Chinese-made batteries. Targeted tariffs would increase the dollar's value by less than blanket tariffs, making this stronger dollar effect weaker by comparison. And if the US makes less water bottles and dog food as a result, that's the price you pay for bringing battery production to American soil. Yet Trump seems to want to bring all manufacturing to the US, no matter how inconsequential it is. No matter how low value or frankly dirty it is. He seems to want it all back in America. As his Treasury Secretary has put it, the American dream is not let them eat flat screens and Chinese baubles, it's to make flat screens and American baubles. So on April 2nd, 2025, Liberation Day as Trump has called it, the administration has disregarded this targeted tariff advice and thrown a retaliatory tariff on every country with a trade deficit to the US, as well as a base 10% tariff on those without one. This has launched America's effective tariff rate to a level not seen since 1910, outpassing even the Smoot-Hawley tariffs, which played a large role in deepening the Great Depression. Of course, these are not retaliatory tariffs, but a tax on anyone who sells anything to the US in proportion to how much they import from America. A 24% tariff on Japan, 50% on St. Pierre and Miquelon, a tiny French island off the coast of Canada, 37% on Liechtenstein, and 50% on Lesotho, because it exports a lot of jeans and diamonds to the US while importing fairly little from America, because it's in the middle of South Africa and imports from South Africa. By the equation used to calculate the tariffs, trade deficit over imports, small Lesotho is the largest thief of American jobs on Earth.
$8 million to promote LGBTQI+.
In the African nation of Lesotho, which nobody has ever heard of.
Now, it could be true that Trump is pursuing both his favorite tariffs and a weaker dollar at the same time. Right after Liberation Day, markets were so scared that the value of the dollar sharply dropped. This could have been because of the sudden loss in confidence in the American economy, heightened volatility these month-to-month decisions bring, or the anticipation of retaliatory tariffs, causing investors to pull their money out of America. Trump, in response, has completely disregarded the stock market, blaming globalists for taking their money out and sharing this TikTok video.
Trump is crashing the stock market by 20% this month, but he's doing it on purpose. And this is why Warren Buffett just said Trump is making the best economic moves he's seen in over 50 years.
Trump both seems like a Mao Zedong type character who will industrialize America no matter the human cost, and a guy who doesn't believe in his own plans or frankly knows at all what's going on.
So just a yes or no, you still do not have a plan?
I have concepts of a plan.
His fans seem like stereotypical Maoists, and his economic advisors seem split on the Mara Lago Accord. Stephen Moran, who has written the most popular paper about it, wrote it for the purpose of outlining all available policy options to Trump to weaken the dollar's value. He believes arrangements to weaken the dollar are on the table after tariffs. Scott Bessent seems to be into the idea of, quote, segmenting the international economy into zones of common security, but he's also an advocate for a stronger dollar. Stephen Miller, Trump's Homeland Security advisor, tweeted this out, which sounds pretty Mara Lago Accordy to me. And Peter Navarro, Trump's trade advisor, has suggested a devaluation of the dollar in Trump's first term, but was rejected by the man himself. Whether or not it will even be followed by successive administrations is completely up in the air. It's like they have this plan for world domination, but can only agree on implementing half of it. That or Trump has just always liked tariffs.
And everything. It's not free trade. If you ever go to Japan right now and try to sell something, forget about it, Oprah. Just forget about it. It's almost impossible. They don't have laws against it. They just make it impossible. They come over here, they sell their cars, their VCRs, they knock the hell out of our companies. And hey, I have tremendous respect for the Japanese people. I mean, you can respect somebody that's beating the hell out of you, but they are beating the hell out of this country. Kuwait, they live like kings. The poorest person in Kuwait, they live like kings. And yet they're not paying. We make it possible for them to sell their oil. Why aren't they paying us 25% of what they're making? It's a joke.
Who knows? Consider the strategic Bitcoin reserve. What's its relation to a new radical currency policy? It was founded using only Bitcoin seized from criminals, but if it's a strategic reserve, that implies the government is planning on stabilizing its value if something were to happen to it. That would involve a government bailout converting dollars into Bitcoin. Is this an admission that they want a weaker dollar? Are the on and off tariff threats on Canada and Mexico a start of a Mara Lago accord to tie security to economic policy? What about when Trump himself had said he wants a stronger dollar? What about when Trump himself has said he wants a weaker dollar? Trump's sovereign wealth fund and gold cards and century bonds may be their crazy plans to cut the debt. Trump coin, that was just for himself. But there's a tried and true policy that would A. lower the debt, B. lower the trade deficit, and C. keep the dollar as the world's reserve currency. Just run a budget surplus. But the way the administration is going, that doesn't look like it's going to happen. I made this video along with another about America's new Gilded Age. If you'd like to check that out, click the big image in the middle of the screen. And if you'd like to, subscribe. We're close to hitting 1 million on this channel. So should we be worried about America's billionaires? Watch here.